Hey everyone, and welcome to Earnings Cheat Sheet for Friday, February 28th. It's Alexis Garcia and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. So, Ed, we got through NVIDIA earnings, but boy, oh boy, there's a lot happening with this market. So, what do you have on top for us today?
Well, we have a couple of overseas e-commerce firms, C and JD.com, as well as Costco Wholesale.
All right, well, let's start with C Limited, which is scheduled to report Q4 earnings on Tuesday, March 4th. Earnings are expected to come in at 62 cents per share versus a loss of 19 cents the previous year. And revenue is seen climbing 29% to $4.665 billion. And here's why we're watching C Limited. Focus remains on balancing e-commerce profitability with investing in growth. And we want to see if Sea Limited is holding market share in Southeast Asia and making any inroads into that Brazilian market. So, Ed, Q3 earnings beat expectations. The company boosted its e commerce sales growth and profitability despite growing concerns over competition. So, what's on your radar with Sea Limited as earnings approach this quarter?
Yeah, I want to see if that growth can continue. This is a highly valued growth stock, and those stocks haven't done too well lately, but this one's still done pretty well. So I want to see if that can keep going. Want to see how they're doing. Southeast Asia is extremely competitive. You have Temu, which we're familiar with in the US. We also have TikTok. They do a lot of e-commerce over in Southeast Asia. So very, very competitive. So that, see if that can hold up margin pressures, other things. And then if they compete against Mercado Libre and some others in Brazil. That's a big new market for them. So can they make inroads? Mercado Libre had good results. Is that a positive for C? Is it a negative for C? We'll see. So there we go.
Well, I see what you did there, but let's hop into the chart, Ed, because C Limited broke out of a cup base with a 119.47 buy point on January 28th. But we can see this pullback as the overall market struggled, and now shares are looking for support at their 21-day line, which is just above this buy zone. So, what are your thoughts with C Limited's chart?
Well, it's looking pretty good. As you can see, the growth on revenue accelerated from the latest quarter. I just wanted to show that in the fundamentals. And while its PE is extremely high at 916, that's also because it's transitioning back into profitability. So it's still going to be highly valued. And I mean, just only, but it's going to come down a lot after this quarter just because you'll have now a bunch of quarters in there. So just want to bring that. The chart looks pretty good. I mean, it's made progress. It's like had a few bases. It's made progress after those bases. It came back to the buy point, came back to the 10-week line sort of a couple of days ago, but bounced off of that pretty nicely. I mean, again, this isn't ideal, but when you consider that the market is selling off and growth stocks are selling off, this is pretty strong. The relative strength line is basically at multi-year highs. Yes, there may be like this is still not at all-time highs, the stock, but it's a long time from it's at multi like a like 3 4 year high 3+ year highs. So probably people who bought back in 2020 have either given up or just just going to hold on and all that forever. So we'll see. So I think this chart looks okay. I mean, if it were right here, if earnings were done and this is where it was, you could say it's buyable off the 10-week, even though it's a little extended from the buy zone. You probably could, but given that earnings are coming up and given the state of the market, it doesn't seem like it. It's something that maybe has something set up, but it may be that it just doesn't provide an opportunity. It's definitely one that investors should be watching, though.
Right. And as you mentioned, always good to keep overall market conditions in mind as you're looking at these stocks. And can you talk a little bit how important it is right now for investors to just stay nimble as things change?
Yeah, you really have to stay with, you can't just have a bullish or bearish mentality or think that these stocks are going to work. Because for a while, there are these high flying AI chip stocks, and then there's these high flying AI software names or some other names, and they just move around. And you just have to adapt to that. Like, listen to what the market is doing and telling you, rather than try to, lock in yourself into that. And this has just been a difficult time. And the thing is, why we like market uptrends? Because the market trends up. I mean, I know it sounds like, and it's just sort of like a going with the current. You don't have to swim very fast to at least make progress if you're going with the current. But if you're fighting against the current, you have to put up so much energy just to stay where you are. So that's why, just playing when the odds are in your favor. The market is not favorable. Yes, there may be pockets that are doing well. Yes, C is holding up reasonably well, but you never know when that'll end. If C comes out with a bad report, it could fall 20%. This is not going to be a forgiving market at all.
All right, well, let's take a look at our next name, which is Costco. That company is scheduled to report fiscal Q2 earnings on Thursday, March 6th. Earnings are expected to rise 10% to 408 per share, and revenue is seen climbing 8% to $62.91 billion. And here's why we're watching Costco. Analysts will be looking for continued strength in margins, traffic growth, e-commerce, and fee income. And Ed, Costco, another one that saw an earnings beat last quarter thanks to increases in e-commerce sales. And we've seen retail giants like Costco and Walmart really making a play for that higher earner, more affluent shopper there with their product mix. So, what are your thoughts with Costco as their earnings approach?
Yeah, and that it's defensive growth, but Costco's always been relatively affluent. And when this is defensive growth that appeals to affluent folks, that's a pretty safe area. I mean, you figure those are people who are still going to spend, reasonable amount, in those areas. Um, so that's one reason why it's doing well. E-commerce has become a bigger part of the business, and that just were with Walmart. So that's something that can be a relatively high margin growth area, just a way to expand the business because it's just, everybody talks about, oh, the parking lots are so full. I'm not going to go there, but hey, I go online, I'll order my 30-pound jar of peanut butter. I mean, sure, or case of 100 of them or whatever. But this is just one that steady performer. Most of the money it makes is on the membership fee. I mean, that's the bulk of their profit is that annual membership. So they just everything else is just sort of break even. So uh this has just been a really strong business for a long time.
All right, well, let's take a look at the chart because Ed Costco broke out of a cut base on February 3rd and it's still in that buy zone. It broke below the 21-day line in trading today. But what are your thoughts here with the technical action and what would you like to see set up?
I mean, it's sort of holding technically you could buy it now. I mean, it's in the buy zone, but yeah, it does feel like it'd be nice to see some strength. It'd be nice to get above the 21-day line. It'd be great if it could sort of move sideways for a few days, then move higher. Because then as if it goes convincingly above the 21-day line, it wouldn't just do that, it would sort of break this trend line from the recent high. You could sort of imagine going there. It's like, oh, okay. In another week, if it could just go sideways and just pop up, that would seem to be a pretty decent buying opportunity. Again, knowing the conditions of the market. And this has also been a situation is that it's not just the market. There have been earnings moves, and that because the market is under pressure, you'll see stocks buck the trend on earnings. But now instead of carrying on and extending gains, they're like wilting after earnings. It doesn't mean it has to happen all the time, but that's another problem with the market. Even when things stand out because of news, if it's just a one-day event, then things can often fade back. So that's just another caveat. But this one is setting up and potentially could have a nice opportunity after earnings.
And I'm going to switch over to the weekly here. And, you talk about just solid growth. We see these solid sales numbers here and earnings growth, but any other uh, things about the fundamentals that are jumping out to you?
Yeah, it's very consistent. I mean, the earning stability rating, I think, is a 5, and it's 1 to 99. Lower is more stable, and it's nice to have things that, that it's just very consistent growth. Again, because most of the profits are coming from the memberships, and that isn't going to change that much. Just a really strong performer. You can look at the relative strength line. That's been really strong the past couple of years, and really over a long history. There's sometimes it'll go flat, but it has long trends of just outperforming the market, and it's just a really solid performer.
Let's move on to our next name, which is JD.com. That company reports earnings on Thursday, March 6th. China's largest retailer is expected to see Q4 earnings rise 15% to 85 cents per share. And analysts expect revenue to climb 7% to $45.52 billion. And here's why we're watching JD.com. Can JD keep pace with Alibaba, at least in e-commerce? And Ed, we've seen investor confidence in China stocks grow in 2025. And we've talked before about why it's so important to pay attention to earnings reports from similar companies in your industry or sector. uh, Alibaba had a great earnings report, and do we think JD is going to maybe benefit from that, or is that a sign of things to come?
Well, it's a little bit different. It's a little bit like saying if we both had lemonade stands, but you also had a thriving AI data center business. Are we really peers when you report really good numbers because of the AI data center? That's a little bit here because JD and Alibaba are huge e-commerce competitors. Definitely, their actual businesses, the bulk of their business, extremely competitive. But Alibaba has a big cloud computing business, a lot of AI. They're doing large language models, so that's been a big factor. They're going to work with Apple, providing data, providing the sort of the power, the AI functions that Apple has in the iPhone in China. So those have all lifted that. JD is much more on e-commerce and logistics and things like that. Very solid business. It's turning around. There may be hopes that things will pick up, more favorable things. But so that's something there. So growth is slowly picking up on the revenue side after some struggles. We'll see if that can continue. But it may not be as exciting as Alibaba in that front. But it may not also have if AI goes out of favor in China, that it probably won't have that same kind of sell-off.
All right, well, let's look at the chart, Ed, because this one is building that cup base with a 47.82 buy point. But we can see how messy this chart is. And as you said, we've seen this revenue growth here over the last couple quarters. But what are your thoughts with the chart here and just overall? We've got potential tariffs coming in the next week. So how are you going to handle this stock?
Yeah, it's interesting how China stocks have weathered that. Most of the names we're looking at aren't directly affected by the tariffs. JD isn't shipping stuff. That's different from rival PDD, which owns Temu, but Alibaba and JD, not so much in the US. There seems to be resistance right around the 42 level, 42.44, 42.73, 42.60. You can see right around there. It's trading right around there. So this sort of treat this as a place where you could buy. The relative strength line is sort of trending up lately. It's still well off highs. There is a lot of messiness here, and you're going to see gap ups and gap downs because even though this trades in the US, it'll move on Hong Kong news too. So it'll move and then it'll also gap up because Hong Kong, when it was up 8% or down 8%, and it's still going to have an impact. And so that's why it could be so choppy at times. That's a problem with a lot of Chinese stocks. So yeah, I mean, if it moves from here, it would be viable. One thing is that a lot of China names have already come out. So that'd be a thing is in China, is this a laggard? Is there a reason why you'd say, I want to buy JD.com? Why didn't I buy one of these other names? Or why don't I buy an ETF? And so that is something to keep in mind. But this is certainly something that should be on people's radar.
And just switching over to the weekly here, anything jumping out at you?
I mean, you can see there was a long, long downtrend. This is true of a lot of stocks, but it's like there was a lot of concerns about the China economy. There's COVID. There's crackdowns on tech companies. Those seem to be in the past. There's still concerns about the economy long term and a slowing population, a declining population, declining working age population. Those are longer term concerns. So maybe you're getting out of some of the overhead resistance because now it's past the 18-month period. Still might be a fair amount of people who still want to say, I'd like to get out of here. So that is something to keep in mind that could be resistance.
All right. Well, Ed, those were three of the big names on our radar, but let's take a look at a few more, shall we? Starting with CrowdStrike, which reports on March 4th. We saw on the weekly here, this one broke out of a base the week ending January 31st. And like many stocks, it has pulled back just slightly below that 10-week line. So what are you hoping to see set up here before earnings next week?
Now, I'd like to see it hold around the 10-week, 50-day line, just above, just below, and then move out. I mean, because it's around the buy point, it's around the 50-day line. You could potentially see that, but again, that depends on how the market. You can see how it's fighting that it was trying to get above that. It did find support there, but now it doesn't. So we'll see. It could be that this looks terrible in a week. I mean, when this comes out, if the market keeps sinking, there's going to be a lot of stock. There's been a number of stocks like CrowdStrike that are trying to hold and struggling to hold the 50-day line right now. But it really is going to depend on the market after that. But definitely one to watch because it could be actionable.
All right, well, let's take a look at Broadcom, which reports on March 6th. This one in consolidation with an official buy point of 251.88, but we see this kind of ugly downside reversal day today, but really it's about 13% below that 50-day moving average. So, what are your thoughts here?
Yeah, this was one of the first ones to recover the 50-day line after the DeepSeek news, but it's fallen off. It's like it tried to get back up there. It was sort of looking interesting. I mean, in an ugly fashion, but it looked better than most of the other names. But it's really fallen apart here. It's in danger of undercutting. And then, and that which, I suppose there could be a double bottom thing, but it's really ugly in that, thing. It need to see this bounce back. It just seems like it needs a lot of repair work. That may be true about a lot of names in the AR hardware space. I mean, again, we didn't know if that it looked for a moment like this was just a blip, but sometimes, when something bad happens and it's like it doesn't seem like it bad, but then it starts happening more often. It's like, when certain things start like electronics start not working so well, maybe at first it's just that one time, and then it's like, oh, this is happening more often. This is really a problem. Uh, so we have to see. It could be that there's a fundamental shift again on AI.
All right, well, let's take a look at Marvell Technology, which also reports next week on March 5th. This chart, really fading from all-time highs and breaking below the 50-day line and approaching that 200-day line, Ed.
Really ugly. I mean, again, it bounced back initially like Broadcom, but quickly fell apart. Both Marvell and Broadcom make custom AI chips. And so it is important to hear about what they have to say, because one threat for NVIDIA, it's not just that people won't need chips, but they'll go to custom chips. And so can Broadcom and Marvell bounce back off of that? But boy, this one needs a lot of repair work, it seems like. I mean, this is very straight down with a lot of jagged things. It may take a long time before this one comes back.
Right. Well, let's take a look at a couple of retail names, starting with Ross Stores. Again, this one has struggled lately as well, trading below this 200-day line and really kind of looking at this 140 level here, hopefully, where it can maybe establish some support.
Yeah, it just feels like in the discount space, there's so many other names. There's Walmart, there's Costco, there's Ross Stores rival TJX. I mean, those are holding up better. And so Ross Stores not doing particularly well. And even TJX doesn't have the greatest relative strength line longer term. I mean, over the last few years. So it just feels like Ross would be nice to see that come back. But boy, Ross, yeah, this one's just sort of gone it just sort of gone sideways. Ross is more of a, sort of slumped in the last couple of years. So it needs to show a lot, not just technically, but a sense that yes, fundamentally, that this can actually lead again. It's been a long time since Raw Store has been a consistent leader. There was a stretch from like 2020, 22, till mid 2024 where it did okay. But yeah, so, this may be more relevant just to see how the general retail and discount picture is looking.
Right. Well, that was Ross Stores, which reports on March 4th. And let's take a look at On Holding. The shoemaker also reports next week on March 4th. And then you can see the damage to this chart over the last couple months. Broke out of this flat base, but then really rolled over and now is below that 40-week moving average.
Yeah, some of its peers struggled. There was some big blowups there, and the market just turned away from highly valued things. And this one also, it has spotty fundamentals. I mean, it'll have the overall growth has been solid. Like you look on the annual numbers, you're like, what are you talking about? The fundamentals look great. And then you look at the quarterly, and it's just like the mix of these big gains and misses and on the earnings side. So that's an issue. It's broken down. It should have been sold a while ago. I had a position, I got out of it probably around the 50-week, 10-week line as it was breaking down from there. And it's just really sold off from there. This is once we've seen some stocks fall really, really sharply right away, but this one gave opportunities to get out. This one might set up again, but it needs to set up again. That may take quite a while.
All right, well, let's wrap up with a look at Zscaler, which reports on March 5th. This one's kind of been moving sideways here over the last year or so, but trying, to hold that 10-week line, but it's below that moving average and it looks like it's flirting with that 40-week moving average.
Yeah, I mean, if it could rebound, there's some recent highs. I'm looking like it seems like 215 or so, or somewhere in that area. Get above that, either that's sort of a handle or its own base within a consolidation within a consolidation, like a Russian doll kind of pattern. But that could be something. But it's lagged a lot of other cybersecurity names. Now, maybe maybe it'll turn around. But this one, maybe something is like, well, why would you go with this over a CrowdStrike, over some other names that have outperformed in the last couple of years? Now, maybe again, it could turn around, but it feels like there's better names in here. But it could show some interesting action if it makes a really strong move here.
All right, Ed. Well, thank you so much for your insights today. And that wraps it up for this episode of Earnings Cheat Sheet. If you want even more market analysis, you can tune in to Stock Market Today with Alyssa Corum. That goes live after the closing bell. Thanks so much for watching, and we'll see you all next week.